Hey everyone, welcome to the channel. It's good to have you here, and I really mean that, because today we're going to get into something that a lot of traders avoid talking about. We all love to talk about strategies, indicators, the latest setups, but we rarely talk about what's going on between our ears. And the truth is, no amount of technical knowledge will save you if you can't get a handle on your emotions. So in this video, I want to have a real, honest conversation with you about trading psychology, why it matters so much, how it sneaks up on you, and what you can start doing right now to strengthen your mindset. If you've ever felt frustrated, stuck, or like you keep sabotaging yourself in the markets, this is for you. So get comfortable, maybe grab a notepad to jot down anything that resonates. Let's get into it. Let's start with a simple question. Why do so many traders fail? It's not because they're lazy or not smart enough. Most traders I've met are hardworking and pretty sharp. It's because the market doesn't just test your knowledge. It tests your discipline, your patience, your confidence, and your ability to stay calm under pressure. Think about this. If trading was only about finding the perfect system, everyone who bought a course or read a book would be rich. But that's not how it works. In fact, there's research showing that up to 90% of retail traders lose money over time. And when you look closer, you see a pattern. Even when people have systems with positive expectancy, they often fail because they can't stick to their rules. This is what people mean when they say trading is 80% psychology. Because at the end of the day, it's not about what you know, it's about what you do and whether you can do it consistently. Let's be real. Trading is an emotional experience. When you put your money on the line, you're not just risking cash. You're exposing yourself to fear, excitement, hope, and sometimes even despair. You place a trade. The market starts moving against you. Your heart rate speeds up. Your palms get sweaty. You start second guessing yourself. Or maybe you're up big on a position. You feel that surge of adrenaline. You think, if I just hold a little longer, I can double this. And in both cases, emotions are trying to hijack your decisions. I've heard it described as a roller coaster, and I think that's exactly right. The problem is, if you don't have a seatbelt, that seatbelt being your rules and your self-awareness, you're going to get thrown off the ride. Let's go deeper into some of the most common traps traders fall into. And as I describe these, I'd like you to think about which ones sound familiar to you. 1. FOMO, fear of missing out. You see a price shooting up and your brain screams, "Get in!" You're going to miss the move. So you chase it and often get in right at the top. 2. Revenge trading. You take a big loss and suddenly all you care about is making that money back. So you start taking trades you'd never normally touch. 3. Overtrading. You can't sit still. Every little wiggle on the chart feels like an opportunity. Instead of waiting for high-quality setup, you're jumping in constantly. 4. Analysis. Paralysis. On the flip side, sometimes you can't pull the trigger at all. You're overthinking every little variable. You end up sitting on the sidelines, frozen by doubt. 5. Greed. You're in profit, but instead of taking it according to plan, you start fantasizing about how big it could get. And before you know it, the market reverses and takes it all back. 6. Self-doubt and imposter syndrome. You see other traders posting their wins online and you start thinking, maybe I'm not cut out for this. Take a moment and consider, if you had to pick the one that's caused you the most problems, which would it be? I want to tell you about something called the amygdala hijack. When you perceive a threat, even just the threat of losing money, your brain's fight or flight response kicks in. Your rational thinking shuts down. You're wired to react. In trading, this is dangerous because reacting impulsively usually means doing the exact opposite of what you planned. That's why people exit winning trades too early or hold losers too long, hoping they'll bounce back. When you understand that this is a biological response, it makes sense why discipline is so hard. You're literally fighting your own wiring. It's not just about losing money on individual trades. Emotional trading has a way of compounding losses over time. You have one bad day, you feel like you need to get even, so you risk more on the next trade. When that goes wrong, you spiral further. Your equity curve starts to look like a mountain that gets chopped off by a cliff. And here's the thing, even if you get lucky and win a few times, you're reinforcing bad habits. So eventually, when your luck runs out, the damage is even worse. This is why mindset work is non-negotiable. It's not an optional extra, it's the foundation. I want to share a few stories, some my own, some from traders I've mentored. I remember a trader, let's call him Mark. Mark was obsessed with catching big moves. Every time he saw momentum, he jumped in without waiting for confirmation. One week, he was up 20% on his account. But because he kept chasing trades, he gave it all back in 2 days. He wasn't lacking skill. He was lacking patience. Then there was Sarah, who suffered from paralysis of analysis. She had a great system, but she kept second-guessing herself. She'd set alerts, watch price approach her entry, and then freeze. By the time she convinced herself to act, the opportunity was gone. She eventually realized her fear of losing was bigger than her desire to follow her plan. Once she started journaling those feelings, she gradually built confidence. And then there was me. Early in my trading journey, I'd have a losing day and think, I'll just do one more trade to get back to break even. 9 times out of 10, that one more trade was the worst one of the day. It took a lot of painful lessons to learn that stepping away is sometimes the most profitable thing you can do. I share these stories so you know you're not alone. Every trader has these battles. Let's talk about what you can actually do to build mental toughness. Have a written plan. If your rules are in your head, they'll disappear the moment you get emotional, so write them down. Keep them visible when you trade. Reduce position size. If you're constantly anxious, you're probably risking too much. Cut your size until you can execute without panic. Journal everything. Write about your trades, but more importantly, write about your thoughts and feelings. Over time, you'll see patterns. Practice mindfulness. Even 5 minutes of deep breathing before you trade can help you stay calm. Accept uncertainty. No trade is guaranteed. The sooner you accept that, the less power fear has over you. These practices don't eliminate emotion, but they help you keep it in perspective. I'd like you to pause the video for a minute and consider these questions. What emotion causes you the most problems in trading? When does it usually show up? How does it affect your decisions? What's one small step you could take to address it? Write it down, even if you never share it with anyone. Naming it is the first step to changing it. Let's zoom out. Trading isn't just about making money, it's about who you become in the process. When you learn to manage your mindset, you're training qualities that will serve you in every area of life. Patience, discipline, resilience, and self-awareness. So if you've been beating yourself up over mistakes, remember, this is a journey. No one does it perfectly. The key is to keep showing up and learning. Before we wrap up, I want to challenge you to make a commitment. To yourself, not to me. Commit to taking your psychology seriously. Commit to doing the work, even when it's uncomfortable. Because the traders who succeed long-term are the ones who learn to master themselves first. I appreciate you spending this time with me today. I hope this video has given you not just insight, but also some practical tools to strengthen your mindset. If you found value in this conversation, please consider liking and subscribing. It's going to help the channel reach more traders who need this message. And I'd love to hear from you. What's the biggest psychological challenge you're working through right now? Leave a comment below. I will read every one of them. Keep learning, keep growing, and remember, if you can master your mind, you can master the markets. Take care, and I'll see you soon.